Hello students. So starting with the second lecture of chapter second, that is accounting for special transactions. So in the previous lecture, we started off with bills of exchange and we looked at the meaning of bills of exchange and then what are the features of bills of exchange, what are the terms that we use in the bills of exchange, then calculation of due date, how do we ascertain the due date and what is a grace period, and then we moved on to how a bill is discounted. So carrying it further and continuing with the same topic. So the next thing that we are going to cover here is dishonor of bill. And what do we mean by what is what is the situation wherein a bill of exchange can be dishonored, or what are the conditions or what are the reasons for which a bill can be dishonored. So starting with the lecture here, when we say dishonor of a bill, it means that the acceptor has refused to honor his commitment. So with the word dishonor only, you can understand what could be the situation. The goods have been sold, right? And the only condition that this particular bills of exchange put on the buyer is that the buyer has to make the payment that has been agreed upon on a particular date as mentioned in the bill of exchange. And dishonoring of a bill will thus lead to the acceptor refusing to honor his commitment on the due date. So there could be any reason. I mean, the acceptor of the bill refuses to honor because of XYZ reason. So it could be that there is not that the acceptor does not have readily available money with him, or maybe he's asking, maybe the party is asking to give some additional amount of time so that they can arrange for the funds and do that. So due to all these reasons, what will happen is that the acceptor will not be able to honor the commitment, that is not make the payment on the particular due date as agreed upon. So when you're not making the payment as agreed upon, or as in when the acceptor is not accepting the bill of exchange or not honoring the commitment as done on the due date, and payment of the bill does not take place, that would thus lead to dishonor of a bill. And at the time of dishonor, original relationship will be restored between the parties. That is, the drawee becomes the debtor of the drawer in his books, and drawer is treated then as a creditor in the books of drawee. So as you understand, with drawee and drawer, we mean, so the drawee is the buyer, drawer is the seller. Right. So the original relationship remains is restored, as in once the payment would have been made. So the relationship would have come to an end for that particular bill of exchange and the settlement would have taken place. However, because the settlement did not take place, because the payment did not happen, the original relationship exists and is restored. That is, the drawee will again become the debtor of the drawer. That is, the buyer becomes the debtor of the seller, and the seller is treated as a creditor in the books of drawee. And why drawee becomes the debtor? Because drawee still owes money to the drawer, and drawer still remains as a creditor in the books of drawee because the goods that the drawer has sold to drawee were on credit, for which the settlement has not yet taken place. And as and when the final payment is made through the bill of exchange, then the drawer will no longer be a creditor of the drawee. And what happens if a particular bill of exchange is being endorsed by the drawer, and what will an endorsee do in case of a dishonor of bill? So now the drawer will become liable here to compensate the bank, or for that matter the endorsee. So what is who is an endorsee? Endorsee is the creditor of the drawer to whom this bill of exchange, the drawer would have endorsed this bill of exchange to that particular creditor, and in the event of dishonor of bill, the drawer thus becomes liable again to that particular endorsee or the bank for that matter. So if in case the drawer has endorsed the bank, or there is a separate creditor of the drawer to which this particular bill of exchange has been endorsed, so then what will happen, that again that particular relationship will also get restored, as in the drawer will again become liable for that particular liability if in case, so if the bill is not retained by the drawer till the date of the maturity. And in order to provide an evidence, so how do the drawer proves it to the endorsee or to any third party that such bill has been dishonored? So there should be a legal evidence of dishonor, and the fact of dishonor is to be noted on the bill by notary public. So basically, on refusal by the acceptor to honor his commitment, such fact of dishonor or such dishonor of the bill should be notified also on the bill itself by the notary public, and that is because it should provide a legal evidence of dishonor in case the drawer needs to prove this in front of the endorsee or any other third party. Like for example, we did discounting of a bill. So in case the bill has been discounted by the drawer and such bill has been submitted to the bank or the discounting house, then in that case also this legal evidence of dishonor, that is dishonoring, noted on the bill by the notary public, would thus prove that the acceptor has refused to honor his commitment. So looking further into the noting charges that are pressed on dishonoring of the bill, is that the fact of dishonor which is being recorded is called noting, and the charges or the amount charged by him, as in the notary public, for his services are called the noting charges. So these noting charges would essentially be done on dishonor of the bill, and it is essential because it would thus provide a legal evidence in favor of provide a legal evidence for the fact of dishonor. And these charges are to be paid by the holder of the bill. So such charges, who would bear these charges? Such charges would be paid by the holder of the bill, as in the drawer. So in case you don't get confused, that is why I am every time mentioning the substitute words for the same. So as here it is mentioned, these charges are to be paid by the holder of the bill, that is the drawer of the bill, on the date of default. So as and when the acceptor refuses to accept or honor his commitment on the due date, so the date of default thus would press such charges, as on the date of the default only on the bill of exchange it needs to be notified that the bill has been dishonored, and the notary public would press those noting charges on the date of default. Actually, the actual liability, however, is of the acceptor. However, the acceptor has already dishonored and not made the payment. So afterwards, such charges would be reimbursed by the acceptor of the bill. So actually, the acceptor is liable for the dishonor. The noting charges paid are to be reimbursed by the acceptor, as because it is the fault of the acceptor that the acceptor, even after committing that the acceptor is going to make the payment on the due date, has still not made the payment. So therefore the ultimate liability is on the acceptor of the bill. However, such noting charges are being put on by the drawer of the bill in order to produce it as a legal evidence in front of any third party or endorsee or bank or the discounting house. For such reason, the drawer for that particular time would bear those noting charges, and then later would get it reimbursed from the acceptor. So hope the concept of dishonoring of the bill is clear. So here, if we sum this up, it is basically refusal of acceptor on due date, and refusal of acceptor to make or settle bill of exchange. So I'm writing the short form, bill of exchange, on due date, and which would thus lead to dishonor of his commitment made. And this dishonor of commitment would ultimately increase the liability of that particular drawer of the bill who was expecting the payment to be received on the due date. However, it did not happen. Thus, it would thus make the owner or the drawer of the bill liable to the third parties, as if it could be the endorsee in case the bill has been endorsed by the drawer, and it could also be the bank or the discounting house wherein such bill of exchange has been discounted by the drawer. Also, this particular dishonor of bill would restore relationship between drawer and drawee as that of drawer being debtor, drawer being the creditor in books of drawee, and drawee being debtor in books of drawer. Alright, moving on, let us take a look at the next concept, that is renewal of bill. And it happens sometimes that the drawee of the bill is not able to meet the bill on the due date. So it is more like, the situation, the scenario is more or less the same. However, in the case of dishonor of bill, the acceptor simply refuses to honor his commitment. However, in the case of renewal of bill, what happens is the drawee is not able to meet the bill on due date. For instance, the drawee is able to make a part payment or is asking for more time, or it could be anything. So he may request the drawer to draw a new bill, as this particular bill of exchange would cease to exist, and therefore in that case what happens is, on that particular due date, since the drawee is not able to meet the bill on due date, he may request the drawer to draw a new bill for the amount due. So for instance, this amount could be the final or the full amount that the drawee was supposed to pay on the due date, or it could be the part payment, that is, the drawee might make some payment on the due date of that particular bill of exchange and asks to generate a new bill with the with the remaining amount which is due to that particular drawer. So in that case, sometimes he pays, so that is what we were referring here. So what will happen is, sometimes the drawee pays a certain amount and accepts the first bill for the balance, for which he has to pay a certain amount of interest, which is either paid in cash or is included with the fresh bill. This bill is thus known as renewal of bill. So for instance, bill of exchange 0012 was due and the payment amount was rupees 20 lakhs, right? And this 20 lakh was due on 31st of March. And on the due date, drawee was able to make the payment for rupees 15 lakh, and the remaining 5 lakh, the drawee insisted to raise a new bill for which he will be making the payment after a certain period, and for this remaining bill, a certain percentage of interest would be charged by the drawer as the period is going to extend. So the balance for which he has to pay a certain amount of it, so he will be paying. So after accepting this bill on the due date, what will the drawer do? Drawer will raise a new bill for the remaining 5 lakh, and with this 5 lakh, the drawee will also be liable to pay a percentage of interest on this particular 5 lakh. So it could either be paid in cash or can also be included within the fresh bill. So it could be 5 lakh plus percentage of interest So the bill can also be made of 5 lakh plus the interest charges, and that would be termed as a fresh bill, and thus this fresh bill is called a renewal of bill. And how will this renewal of the bill generated, and the amount of that particular new bill? So basically the face value, as we discussed in the example before, the remaining 5 lakh, and this 5 lakh we have determined is the face value of the original bill, that is 20 lakh minus the payment that has been already made by the drawee. So 5 lakh becomes the value as in the face value. So the amount of the new bill would be face value of the original bill minus the cash payment, if any, plus interest for the renewed period. So this 5 lakh plus interest that would be interest charged for the renewed period. So now looking at the next concept, which is retirement of bill. And what does that mean? So sometimes the drawee pays the bill before the date of maturity. So till now, in the case of dishonor and in the case of renewal, we saw that the drawee is not able to make the payment on time, or refuses to make the commitment, or rather asks for extension for the due date in order to make full payment of the bill of exchange. So in this case, particularly retirement, so this is different from dishonor and renewal altogether, because in this case what happens is the bill is retiring before the date of maturity. And why so? Because the drawee sometimes pays the bill before the date of maturity. So the reason could be that the drawee wants to settle the bill of exchange, as they have the payment available with them. And under such circumstances, what will happen is the drawer allows certain amount of rebate. So it happens, so these are some perks which would thus motivate the drawee to make the payment before the due date. So what happens in the business is, for any, it is a certain amount of rebate or a certain amount of discount is always provided in terms of payment, in order to encourage the payment being settled at the earliest. And therefore, in such circumstances, when the drawee agrees to pay the bill before the date of maturity, the drawer can provide the drawee a certain amount of rebate or discount, which is calculated on a certain percentage per annum basis. So this could be according to the industry norms, that the industry norms that the drawer will allow a certain amount of rebate or discount at a calculated, which would be calculated on certain percentage per annum basis. It could be, as per the industry norms. So for instance, if you are, I'll pay you 10% discount, or I'll give you 10% rebate, or 15% rebate, whatever is followed ideally by everyone in the industry. So that percentage of rebate shall be allowed by the drawer to the drawee in case the bill is paid before maturity. And such rebate is calculated from the date of payment to the date of maturity. And on what grounds do we determine the rebate? The rebate is calculated from the date of payment up to the date of maturity. Say for instance, the bill was due after 3 months. Drawee settled the bill within a month. And the rebate allowed, thus the rebate shall be calculated as the payment was done within 1 month, and the rebate is calculated from the date of payment to the date. So the date of maturity was 3 months. However, the payment was made within the month. So for 2 months, the rebate shall be allowed to the drawee. So understanding this particular concept, it is basically that the bill of exchange will retire before the date of maturity. So on the date of maturity, after final settlement, the bill anyways has to cease to exist. That particular bill of exchange would cease to exist as the final payment would be done by the drawee to the drawer. However, in the case of retirement, what happens is such bill gets paid before the date of maturity, and because the bill has been paid before date of maturity, the drawer will or shall amount the drawer shall allow certain amount of rebate or discount to the drawee, which would be calculated on a certain percentage per annum basis, and that percentage could be drawn or decided by the drawer in term according to the industry norms. Such rebate, and how do we calculate such rebate? After determining the percentage on which the rebate shall be allowed, then we would be ascertaining the amount or the period for which the rebate shall be allowed, and such period would be calculated from the date of payment up to the date of maturity. All right. So proceeding further, then let us now take a look at the accounting entries and how do we classify such bills of exchange in the books of accounts. So for instance, how do such bills get classified into the books of drawer? How do such bills get classified into the books of drawee? So for the convenience of accounting, bills are classified as bills receivable and bills payable. So what is a bills receivable? So all bills are bills receivable to those who will receive the bills, and payable to those who accept the bill. So basically bills receivable to the holder or the drawer of the bills, and bills payable would be to the acceptors or drawee of the bills. So wherever we are referring bills, we mean bills of exchange. Okay. So do not get confused with bills means the invoices we are referring to here. Wherever we are classifying or wherever we are specifically mentioning bills, so by bills we mean bills of exchange, and such bills of exchange are further categorized into bills receivable and bills payable. So it would be bills payable in the books of drawee or acceptor of the bill of exchange, and it would be bills receivable in the books of drawer or the holder of such bills of exchange. So therefore a same bill can be both a bill receivable as well as a bill payable. So the difference is that bills receivable will be for the drawer of the bills and bills payable would be in the books of the acceptor of the bills. So holder of the bill, however, has the following four options available to him. So he may retain the bill till the date of maturity. He may get the bill discounted. He may endorse it to a third party in settlement of a debt, and he may send it to his banker for collection. So on drawing of this bill of exchange, once the bill of exchange is made and the agreement is settled and done, that there is a drawer and there is a drawee. So the drawer, as in the holder of that particular bill, has the option that he can choose to retain the bill till the date of maturity and wait for the payment to come and the settlement to happen, or he may get that bill discounted. So with the bill discounted, as we saw, discounted of a bill means that such bill would be passed on to the discounting house or to a particular bank, and the holder will settle for an immediate cash payment, and such immediate cash payment would be done in exchange of a percentage of a discount that the bank will charge, because the bank is providing immediate cash in exchange of the bill discounted that is being given to the bank by the holder. Again, he may endorse it to a third party in settlement of a debt. So basically in this particular scenario, the holder will pass on this bill of exchange exchange to the third party, and as and when the payment is due, such payment is to be made to the third party instead of the holder. And lastly, he may send this particular bill of exchange to the banker for collection as to once the bill becomes due and the date of maturity approaches. It is the responsibility of the banker to ensure that the payment has been done from the acceptor of that bill of exchange. So now on the basis of these following four options, let us take a look at one by one that how entries are done in the books of accounts. So in the case when the bill is drawn and accepted, so we'll look at the accounting entries step by step. So in the first scenario, once the bill is drawn and accepted, so what would be the entry in the drawers book and what would be the entry in the drawers book? So in the drawers book, as we all know, bill of exchange becomes bills payable, and in the drawers book, the bills of exchange will become bills receivable. So bills receivable, as the bill is being drawn, so bills receivable account would be debited, and crediting the drawers account as the bill drawn has been accepted by the drawee. So once the bill is duly honored on maturity, so dishonored, we saw the meaning of dishonored when the acceptor refuses the commitment of making the payment on that particular due date. So honoring of the bill on maturity means that the payment has been settled on the due date of maturity by the acceptor of the bill. So here, because the payment is being received in terms of the bills receivable, so bills receivable account would be nullified. The asset that we created will now be settled. So we would be crediting the bills receivable account and debiting the bank account as the payment is being received from the acceptor of the bill. So this entry will be made if the drawer retains the bill till the due date and receives payment. So this particular entry would be in the first case, in the first option that we saw, that the drawer is retaining the bill till the maturity. And in the books of drawee, what will be that the bills payable account will be debited, and to bank account, because the payment is being done by the drawee, so bank account would be credited and bills payable account would be debited as the bill of exchange is being settled on the due date. And in case that bill is endorsed to a creditor by the holder of the bill, so because it is being done by such endorsement is being done by the holder of the bill, so this particular entry would not be there in the drawers books. It will only be in the drawers book. So what would be the scenario that the holder of the bill is endorsing it to a creditor, endorsing the bill to the creditor. So endorsee's account. So once it is endorsed, the payment will go to the endorsee instead of the bank account. Right. This entry won't change in the case of when the bill is endorsed to a creditor. The only thing would be that if the bill has been endorsed to a creditor, so instead of the bank account, we will be debiting the endorsee's account and crediting the bills receivable account. All right. Now looking at the next entry. Now when in the scenario, so the second option that we saw was when the bill is discounted with the bank. So in case of discounting of a bill, so again, discounting of bill option would be exercised by the drawer. So such entries will only be in the drawers book and not in the drawers books, because drawee is not doing such adjustments. Only the drawer of the bill is getting such bill of exchange discounted. So initially, with the full amount of bill, bank account, that is to the bank into which such bill of account is being discounted. So such bills receivable will be credited and bank account is going to be debited with the full amount of the bill. Now with the discount amount, what is going to be done is discount on such bills account would be debited to the bank account. So this discount is being given by the bank to the drawer. So discount on the bills account is going to be debited with the amount of the discount. to bank account, and alternatively a combined entry can also be done in the case of bills receivable. To bank account, we will be debiting with the amount of the bills receivable. As to the discounting that has been done on the amount of the bill, full amount of the bill would be here. Discount allowed and discount on bills account would be debited here, and to the total would be the bills receivable account that would be credited. So this is the entry that you are going to pass in the drawer's book in case the bill is discounted with the bank by the drawer. Now, when the bill is sent to bank for collection and the bill is duly collected, so we saw one of the options out of those four options was when the bill has been by the holder, when the bill has been sent to the banker and the banker is entitled to collection of that particular bill on due date of maturity. So once it is sent, the nature would be the bills receivable account is going to be credited and bills for collection account would be debited with the full amount of the bill. So that is when it is being sent, and on collection again such bank account is going to be debited, and instead of the bills receivable account we would be crediting the bills for collection account. So as you saw in this first case where we saw this particular entry, so this particular entry is going to be there, and the first entry that would be passed in the drawer's books would be this only, and then on the basis of the options exercised by the drawer the entries would be subsequently done. So like in the case of bill is duly honored on maturity, this entry would be passed. In case of bill is endorsed to a creditor, this entry is going to be passed. This particular entry remains same. All right. So now when the bill for collection is collected, so then bank account is going to be debited as the amount is going to be received in the books of the drawers, and such bill for collection would be thus credited, and thus this account will come as nil and the payment would be received in the bank. Okay, now when bill is retired before maturity, so here we are talking about retirement of the bill. So what entry is to be passed in case the bill is retired before maturity? So here bank account is going to be debited because the payment is being received, and then discount on bills, that is the rebate that is being given to the particular drawee, that account will again be debited to the bills receivable. So here the amount would be full amount of the bill of exchange, and that would be segregated into the discount provided to the drawee, discount provided or discount on bills, that is a rebate account, and also the payment that is received before the due date of maturity, right? And what would be the entry? So this entry will be definitely will be there in the drawee's book as the drawee is making payment before the due date of maturity, however settling the bill of exchange. So we will be debiting the bills payable account, and then again the same accounts would be credited. In the case of the drawee's books, that bank account would be credited as the payment is being made and discount is being received, thus it is being credited to discount on bills or rebate account, either of the two things depending on the situation or the question that we are solving. So if it is a rebate account that the business is opening, then rebate account is going to be credited, otherwise the discount received, that is discount on bills of exchange account, would be credited. So now when the bill is dishonored, so we looked at this concept dishonor of a bill. So in such cases, how the accounting treatments are reversed in the drawer's book or in the drawee's book, let us quickly take a look at that. So the four options that we saw, we would one by one take a look at such four options and what will happen when the bill is dishonored in case any of those four options are exercised. So now if it is retained by the drawer till maturity, so what are we going to do? Because the drawee will become the debtor as we read in the concept also earlier, because the drawee becomes the debtor, so drawee account is going to be, as the original relationship is going to be restored, so the drawee's account would be debited and bills receivable account would be credited. Likewise here, the drawer becomes the creditor in the drawee's book, so drawer's account would be credited and bills payable account would be debited. And also the entries, if in case of if the bills have been discounted, again the reverse entry wherein the drawee's account is going to be debited, as everywhere the drawee has become the debtor, so therefore we are debiting the drawee's account in all the cases. So in case of bills discounted with bank, drawee account is going to be debited and bank account credited. Here also endorsee account credited and drawee's account is going to be debited. So we are restoring the relationship of a debtor and a creditor. Here the endorsee was the creditor of the holder, still remains the creditor of the holder. Bank account here is being credited, and then again bills for collection is being credited and drawee's account being debited if sent to bank for collection. So here the accounting books, in the drawee's books, the accounting entry remains the same, as all such four options are exercised. All such different options have been exercised by the drawer only. In the drawee's books, the entry would remain same, or the adjustment would remain same, that the bills payable account is debited and the drawer, that is the holder of the books, becomes the creditor in the books of accounts of the drawee. So this will be more clear once we solve a particular case scenario, or once we do an illustration. So now what would be the treatment of noting charges that are paid on dishonoring of the bill? So if they are paid by the drawer, which is mostly the case that the drawer bears such expenses or such charges, so drawee's account is going to be debited to the bank account, right? And if paid by endorsee, so drawee's account is debited to endorsee's account. So here why are we debiting drawee's account? As because we are restoring the relationship of debtor and creditor. So debtor being the drawee and creditor being the drawer. So therefore, in the books of drawer, we would be debiting drawee's account, as such payment would ideally have to be borne by the drawee, as this ultimately is the responsibility of the drawee who has initially committed but now refused to make the payment. So as and when it becomes due later on, the drawee is liable to pay, and once that payment has been done, this particular account can be settled. So therefore, in the case of paid by drawer, once the bill has been retained with the drawer till the date of maturity, so drawee's account is going to be debited and bank account credited. In case of if it is paid by endorsee, so then drawee's account debits to the endorsee, so drawee becomes liable to pay to the endorsee. And then if paid by discounting man, then drawee's account will be debited to such discounting bank. And what would be the entry in the drawee's books? So such entry would be such charges would be debited and credit the drawer's account. Here also the entries would be same in all the three cases. As in the drawer's book, we are only concerned with the drawer. All these adjustments are being done in the drawer's books but not in the drawer's book. So we would be in the drawer's books, it would be noting charges account debit to drawer's account. Alright, so the next accounting entry so the next adjustment that we see here is when the bill is renewed for a further period. So here also drawee's account is going to be debited and bills receivable account is going to be credited, and this would be when we are cancelling the old bill. So the entry which is being passed on for cancellation of the old bill is we would be debiting the drawee's account and crediting the bills receivable. For interest on the extended period, drawee's account is going to be debited and interest account being credited. And for drawing the new bill, so it would be the same entry, as in we would be creating a new bill, so bills receivable, that new bill becomes the bills receivable in the books of drawer. So bills receivable account debit to drawee's account. And here in the case of drawee, when the bill is being cancelled, so such bill payable will be debited and drawer's account would be credited. Interest account is debited, 2 drawers in the case of interest for the extended period. So the interest here which is credited would be debited in the drawees books, and drawers account is going to be credited. And here again this is initial or the initiation of a new bill. So drawers account debit to the bills payable account. So this completes our lecture, and in the next lecture we would be first doing the illustration in which we will be covering the accounting entries and how such entries are being done in the books of accounts in all those 4 cases, and that will help you in understanding that how such books of entries are passed, and you would be able to understand. So therefore, before starting the next lecture, do revise such accounting entries and understand all such 4 options. Make your concept stronger and then only solve the illustration. So take care and bye bye. See you in the next lecture.